Good morning, traders. It is 8 a.m. Chicago time on Monday, the 18th of August, 2025. Thanks for joining me today. A quick reminder that derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. We're going to follow our normal routine here and go right into the convergent trading pre-market summary sheet. If you have questions about any part of this, of course, you can just pop us your question in chat. Do my best to get back to you or attach it as a comment to the video. A lot of questions get answered as comments to the video. Again, we're back to the Monday, Wednesday, Friday routine for the TraderBite. Hasn't picked up steam yet. It's fine. I enjoy doing these. And it's not for, numbers. It's really because I like to talk about the markets, and I think and I hope that I'm making a difference for a lot of people as I've gotten feedback that I've done that for many in the past. So that's why we're here. Few things to note. Again, a lot of detail about what I do and how my approach is and all that stuff. I've been trading the same way since 2000, so 25 years. And I've been trading the same way since 2005, really, when I got away from scalping for ticks as almost like a market maker in my own prop shop. And I want to impart this on anybody that's willing to listen. So the details of what I do are covered in the accelerator program in the bottom right hand of your screen. I'll throw another image of this. I do want to build a community based on what we're doing, and that's what convergent trading is about. So let's look at the sheet in front of us. You can see that the S&P really unchanged. I mean, settlement was 64.7150. We're trading 68.50 currently. We're testing the full session VWAP from below. We have a multi-distribution profile in the S&P. What's driving things? The overall risk posture is mixed today. Again, not much of a change in the indices, not much risk on. We could see the copper's coming off. Copper is really getting a lot of attention. By the way, the commodity space entirely is getting a lot of attention because of these tariffs. Essentially, the tariffs on copper, for example, 50% tariff or whatever the latest nonsense is. What that does is it makes it very expensive or relatively very expensive for U.S. Producers. Remember, we want to bring manufacturing back, but we keep taxing the raw materials. Makes no sense because filling the demand within the U.S. for copper and whatever other metals or raw materials we need is going to take 4 to 5 years to mine all that stuff. Sure, we have copper in the U.S., but what's happening is it's making it a lot cheaper, making foreign products a lot cheaper. And remember, tariffs are paid for by the consumer. So U.S. citizens are paying an additional sales tax when we're talking about tariffs. And what that's doing in the commodity space is it's just creating a lot of ARB opportunities and things like that for commodity traders. So in general, commodities are getting a whole lot of attention recently by funds and very, very large traders. So we like to look at what's happening there. Things like platinum, which is what's called the sleeping beauty. Platinum is more expensive, more valuable than gold, but hasn't really moved up at the same rate as gold. But gold has reached what are considered relatively stratospheric prices. And so now platinum's getting the attention. It becomes another store of value, another hedge against a falling dollar and all of that stuff. Speaking of the dollar, it's trading at 97 and 91 and a half cents against the basket. The euro's been steady. The Japanese yen falling just slightly. Japan is not in as strong a position as it used to be. What are the themes for the day? The UK balance of trade number came in lower than expected. U.S. President Trump hailed great progress at the Putin meeting in Alaska. Very odd meeting on Friday, but one or two significant items. No ceasefire was achieved. U.S. President Trump to meet, the meeting went for, I think, an hour or so, and then there was a big long agenda that was leaked over the weekend or was found at a printer in a hotel, and all of it was thrown out. Essentially, Putin turned around and got on his plane and took off. So nothing's being said by the president or the White House in general, but it doesn't seem like it went very well. So U.S. President Trump to meet with European leaders and Zelensky later today. There's a whole coalition coming. I would love to see this war end. I mean, it's just insane how much damage is being done here to both Russia and Ukraine. U.S. President Trump said he will hold off on raising tariffs on Chinese goods over the country's purchases of Russian oil, pushing that off again. Annual Jackson Hole Economic Policy Symposium takes place August 21st, 23rd. Powell due to speak on Friday. This is important because a lot can be revealed at Jackson Hole. A lot of the greatest financial minds in the world show up there, including ECB's president and so on. Tesla slashes UK lease fee nearly 50% as sales slump. What's left for today? We have 10 a.m. Eastern. We have NAHB Housing Market Index, and then we have the 3 and 6 month Treasury bill auction. I'm going to look for the rest of the week. The rest of the week, we have inflation out of Canada tomorrow, building permits, prelim out of the U.S., housing starts and balance of trade out of Japan, housing starts out of the U.S., balance of trade out of Japan. Seeing as it's Monday, I like to just be aware of what's coming. Inflation rate out of Great Britain, 2 a.m. on Wednesday, FOMC minutes, 2 p.m. on Wednesday for the U.S. Thursday, we have the HCOB manufacturing PMI flash for Germany. Great Britain gets the S&P Global Manufacturing PMI at 4:30 Eastern a.m. Existing home sales at 10 out of the U.S. and the inflation rate out of Japan. That's going to be a very important one on Thursday at 7:30 p.m. Friday, we get retail sales out of Great Britain at the open. And then, as I said, Fed's Powell. That's what we've got. Looking at the RAN, RVOL, RAN is pretty much in line except for the Russell. Russell really drying up. So if you're trading the Russell, just be aware that it's very, very thin in terms of range and volume. The volume in the S&P and the Nasdaq are a little bit on the low side so far. You know, we've traded 99,000. We normally would be at about 120,000 or so, and the inventory is even. Okay, Bitcoin has come off of its highs, has been trading pretty aggressively, pretty good range there, pretty good volume. Ether, very strong range. Basically, currently we're trading at twice the average range at this point of time versus the 20-day average. A lot going on there. I'm not sure how many of you are trading the futures in crypto. I'm very, very curious. Maybe MBT for Bitcoin and the micro ETH or whatever. Is anybody trading that? Seems really interesting. Okay, let's look at the market itself. Let's start here with the relative cumulative delta. And what we are comparing when we look at this chart, cumulative delta is very often misunderstood, right? That it's being treated like it's some sort of an indicator. Cumulative delta is simply explains the aggressor, the net volume of the aggressor so far in the session. And what we see here in the S&P is that the net volume of the aggressor, you see it starts, the delta always starts at 0 at the open, and we're comparing the open versus where we are currently. So what we have done is we've pushed back up. We put in a higher low. We pushed back up overnight. We've held above VWAP. We've created a small distribution on the upside to the upside in the overnight session, and then we cross below the full session VWAP, test, retest, and then we have an impulse down, so we're expecting continuations lower. And then we are just now coming back and retesting VWAP from below. But look at what the delta is saying here. The delta is saying that the move up has very poor buyer participation. So what we have here is basically kind of a drift up, right? We were at this price earlier, right in here, right there. This is where we were earlier. Look at the delta at that point. It was pretty positive, not great. 600 contracts on the positive side on the delta doesn't really tell us too much. But on the retest, we have a pretty negative delta, which means that the aggressors were on the sell side, overwhelming buyers. In other words, they're hitting the bid more aggressively than they're lifting the offer. And then on the retest, those buyers are not coming in and taking it back to zero or at least positive. And this, this is during a quiet period, of course, comparing the European open right in here with where we are now is not a fair comparison, so to speak, but still it tells us how the overall posture of the aggressor is. In the Nasdaq, it's just been teetering a fair bit. The Nasdaq is below its VWAP as well, held VWAP above, built a distribution above, then impulse down. We got the continuation, which turned into an impulse. So we're looking for another drop, which we got right in here. Then we're looking for another drop, which we got right here. But then the Nasdaq is a little bit better at lifting, even though it's staying away from the VWAP relative to the S&P. So relatively noisy trading so far in both of those products. Kind of a bit of a drift. Here's crude. I want to remind you that crude has rolled to October 2025. Crude is trading CLV5 with a premium back adjustment of negative 82 cents, which means that as of today, you're going to take the October contract and trade it at its current price. You really should be rolling forward. And then you need to back adjust all of your historical data by negative 82 cents. In other words, bring it down 82 cents so that you don't end up with this 82-cent gap that doesn't really exist. That's crude. And what we have in crude is just a very wishy-washy, very balanced open. Crude is very interesting in that it has been drifting up and down. The demand is still relatively strong, but there's been a supply battle from OPEC, while Saudi Arabia wants to maintain control of supply against U.S. producers. And so it's just kind of taken a bit of a beating. We can look at crude a little bit closer in just a bit. Gold is the other product I watch. Gold has a very difficult time holding prices above 3,400. So every time it's gone up there, it's kind of hung out for a little bit and then just come right back off. And today was no exception. Let's start with the S&P. Here's the overall picture of the S&P. We've done a pretty good job in the S&P of pushing to new all-time highs. We have relatively weak structure below. This area here is expected to be the next key test area down into the 6430. And what it's done is in this stock zone right here, what it's done is it's tested, pushed up, test, and it's testing from below here. So if there's any continuation in the S&P, I would expect it to push through to the downside, retest that 6450 area, hold, and if it cannot find buyers into 6450, then it's very likely to push through, retest up into, not exactly on 64.50, and then the target becomes the 64.30 zone. That's the key play. On Friday, what did we do? This is the high of Thursday. This is the low of Thursday. On Friday, we pushed outside. We spent quite a bit of time above. And the expectation on Friday, if you watch that video, is a pullback consolidation. I expected it to push into and through 65.20, giving us an opportunity to get long above the 6,500 on a retest for a push to about 65.18, the next measured move. That never happened. What it did is it tested up, and then it tested below the low of Thursday to finish on the low end, right? To finish on the low end. And so that's really key here to recognize that if it had any interest from the buyers at this point over Sunday night's open, that we would at least be at the microcomposite point of control of 64.80. You are wrong. I'm not anti-Trump. I'm anti-politicians. Joe Biden got the same this idea, I'm not going to get into it here, but this idea that I'm cheering for a president is absolutely absurd. It only occurs here in the U.S. We're not on teams. These people are supposed to be serving us. I'm not gonna cheer on a president, and this one has very, very special characteristics. So he's gonna hear it from me. Look at what's happening, but whatever, man. It is what it is. It's these politicians are supposed to be servants to the people, not people who enrich themselves, whether it's Nancy Pelosi or Marjorie Taylor Greene or whatever. They're all just a bunch of crooks, really. And so it really disappoints me as someone who's been here for such a long time. And monitoring politics globally. I look at politics globally. It's just, I don't expect this country to be in this position, but here we are. Anyway, enough of that. So what are we looking for here? Okay, the idea, the primary scenario here is going to reveal itself very quickly after the open. Very quickly after the open. What we're looking for right after the open is, hang on, there's a chart that I wanted to show you. Do we push through and squeeze past the full session VWAP mid and get back settlement so that we're positive on the session, or do we test and retest, come back, hold balance, which is my primary expectation, hold balance, make another attempt, and then give it up to the downside to test 64.50 and then to push into that all-important 64.30. So what's my primary scenario? We're opening very much in balance. We're on top of the overnight point of control, but we are very likely to open in range, which gives us the statistic of the prior settlement, which is around 75% high, 75% historical probability of a test of settlement. If we come to settlement and I see that Delta is shooting up, there's pretty good lifting to the upside, then I'm off of shorts, but most likely it'll test and retest, fail through, and then start to explore the downside here, taking out the overnight low, giving us the overnight stat, taking out the overnight low, and then the target becomes, we trade zone to zone, stock zone to stock zone, and we're looking for the target at 64.30. That's my primary scenario. There are some early indications that this is the likely higher probability play. The secondary is an open in range, comes down, takes out the overnight low quickly so that sellers are coming in to rush. Market on open orders come in to rush to sell. They take out the overnight low. We've got our overnight stat. If it comes back towards and into the open, then I'm looking for it to take out the prior settle to give us the prior settle stat. And then very, very likely to push back to the MCV VPOC at 64.80. We've got quite a bit of balance. You could see here, here. There's a fair bit of volume right there. And then we've held this MC VPOC area, and I'm looking for this to get tested again. Once we test the MC VPOC, the idea is done for. Might push to 64.90 and then basically come back into the higher balance. That's the secondary scenario. Anything above here is gravy. We always keep runners on, but those are the key ideas. I think that my expectation, based on a few clues, including the negative cumulative delta, that the sellers are likely to be more aggressive and will likely come in and sell it on a retest of prior settlement. The open is going to be very important. Watch the open carefully today. Okay, crude, if you recall, I think I did it in a TraderBite. I'm not sure if I did it in a TraderBite or at Convergent Trading. Crude, I outlined this zone here in crude, and I said this is after the tests. Let me make this line thicker. After the test, this splash down and back up, this zone, this battle that resolved to the upside, this zone is very important. And it continues to be important. It was the launch pad. You know, I put this zone in right here in my discussion of this. This was the launch pad for this pushback to our key magnet zone, this purple zone, and it has drifted back up. And what has it done? It has tested this zone again, and it is trying very hard to hold up there. It is stuck. It is imbalanced. It is stuck in this high volume node. If the ideal situation is if it breaks through the low volume node at 61.65 to 61.60, I'm referring to the October contract, then this creates a tremendous opportunity for the prior week's low, and that's a nice hold to 61.09 and most likely a test to 61 even. If it gets through 61 even, the buyers are really toast. We start to explore all the way through the 59 handle in crude. Pretty good opportunity there. So as long as it sits this morning, as long as it sits in the zone here, hands off, not much to do with it unless you're scalping. It needs to break through. Here's the Nasdaq. The Nasdaq has pretty much the same formation as the S&P. The Nasdaq has had to struggle with this decent resistance. You can see that resistance band there at 73,880. 73,880, and it's just falling off. So what we've done is we've created a multi-distribution profile, but the Nasdaq is sagging a little bit more than the S&P. It's not able to get back into DGPs. It's relatively staying relatively away from the prior settles. So the Nasdaq's expected, the primary scenario is because we have a weak low here. You can see there's no taper in the profile. I expect it to test, come back, test the VWAP, prior settle. We're opening in range. It also has that prior settle historical probability. Test the prior settle, and if we don't see players come in and throttle this thing up into and through the 23,881, 880, then it's very likely to test the yellow band, which will be down into the 23,650. This is actually my primary scenario in the NASDAQ. The secondary scenario is it regains, I don't want to change colors, it regains prior settle, consolidates, and then ultimately breaks through to 23,881. And if it does, the key target today is going to be your MCV-POC right up here at 23,940, 23,940. That's where it's likely to settle down, and that sets us up for new highs. Okay, I know I'm covering a lot. It's Monday, so it's a longer show, but there's a lot to cover here. If you don't understand any of this, I've really put together the accelerator program at Convergent. It is really a prop trading program, and it breaks down everything that we look at, the setups we take, how we do our homework, the bias, and all that stuff. The next cohort starts September 16th. If you want more information, I'll put the link in the chat. If you decide not to be a part of that, please keep showing up to the TraderBite. I don't mind that you want to learn the slow way, but if you want to accelerate your process, the accelerator program is the way to go. Okay, we've tried to make it as cheap as possible or as low cost as possible. It's not cheap. It's got a lot of information. This is cohort 6. We try to keep it as low cost as possible, but there's just a lot that's packed in there. It's a 6-week program with 9 modules and live trading on the last week. Good luck. I'll catch you on Wednesday. Hopefully you've picked a thing or two up today. Cheers.